matrix is everywhere. It is all around us. Even now, in this very room. You can see it when you look out your window or when you turn on your television. You can feel it when you go to work, when you go to church, when you pay your taxes. It is the world that has been pulled over your eyes to blind you from the truth.
This is what a poor laborer earns in a year in Burundi, the poorest country in the world. This is what an average American earns in a year. And this is what the richest man known to us is worth, which is more than the combined yearly income of these 50 countries of the world. Why is there such a massive inequality of wealth, you ask? If you attended a school where when the teacher asked the pupils what they wanted to be when they grew up, and the answers were firefighter, police officer, teacher, or at the very best, a lawyer or a doctor, and no child was inspired enough to say they wanted to be a business person or the head of the state or a banker, then you were born and raised in the matrix. You would not question anything beyond what you think is achievable. And when you have your kids, you will teach them the same thing with all due sincerity. So you, your friends, the people you meet, your mentors, your parents, in fact, everybody you will ever talk to in your life are all poor. This puts you at a disadvantage from the very beginning. Let me tell you a little story. Once upon a time, in a farm, there lived 3 farm animals, a hen, a sheep, and a horse. The hen often felt neglected as she had to scrounge for herself, so she would often look up to the sheep, who she think received preferential treatment and was fed well by the farm owner. The hen wished to be a sheep, or at the very least have her chicks grow up as a sheep. However, the sheep, despite her apparent advantage, admired the horse. Not only did he receive abundant food, she thought, but he also had the privilege of accompanying the farm owner wherever he went. On the other hand, the horse, burdened by the demanding workload, knew what he did was very hard work, but he also knew that he enjoyed the top position on the farm, making it all worth it. He wished that if he ever had a son, he would teach him how to be even more productive on the farm, hoping to receive even better treatment from the owner. The hen would give the owner her eggs, the sheep would give the owner her wool, and the horse would let the owner ride on his back all day. Although these animals wished for a better life, none of them ever questioned why they were born on a farm in the first place, and why the sole purpose of their life was to serve their owner. They had never encountered creatures beyond their limited world. The farm was their entire world, what they could see, what they could hear, and what they could think about.
It is the world that has been pulled over your eyes to blind you from the truth. What truth? That you are a slave, Neo. Like everyone else, you were born into bondage, born into a prison that you cannot smell or taste or touch. A prison for your mind.
Not only your parents, but your school as well, would most likely have trained your thoughts to become a professional, enjoy a secured job, and live a risk-free life. Being surrounded by like-minded people during the most important years of your life, the chances of breaking free from the matrix were very slim, unless you took the pill of truth at an early age. This pill would have opened your eyes to a world beyond the matrix, allowed you to see, and made you believe in what was achievable. To explore the world beyond your own, you need to begin by understanding how money is created in the world. Before the significant unequal distribution of wealth existed, there were small settlements where people traded valuable material items such as a goat for a sheep, a chicken for a duck, or a cow for 4 sheep. In this system, both parties involved in the trade needed to possess something of intrinsic value in order to engage in the exchange. This system, once known as the barter system, persisted for many millennia. More millennia passed, population grew, and people started living closer together. Governments, starting as early as Mesopotamia, Greece, and the Roman Empire, devised a system of currency. These currencies took the form of coins, which were crafted from expensive metals and carried their assigned value. Over time, governments realized that people assigned value to the written inscription on the coin rather than considering the actual worth of the metal itself. As a result, they reduced the proportion of precious metals in the coins. This led to a situation where the material composition of the coin was worth less than the assigned value indicated on its face. This is how inflation came into existence. Then came paper money, which dates back to the 7th century China. These were privately issued bills of credit that represented deposits of coins in a particular establishment, such as a shop or a wealthy individual's treasury. These notes did not carry any intrinsic value and were simply receipts. Soon, such institutions that would store people's wealth and give out receipts for it started being called banks. People started exchanging these bank deposit receipts as if they were money itself. These bank receipts became the mainstream currency. Initially, banks used to put people's deposits in vaults and would charge a fee for their service. But banks quickly realized that they could make a lot more profit if they lent out the depositors' money to other people seeking loans and charged interest on those loans. That's when the real crooked game started. This was the first pivot point of money inequality. See, interest only helps one person, the rich, who is lending out the loan. Although interest had been around for thousands of years, it had never been made on such a mass scale before. Loans would be given out with something as collateral, like a house. Let's say a poor man wished to start a small business, like a fruit vending business. He had to take out a loan from the bank to buy equipment and merchandise. Then, if his business failed, as most startups do, he would not only face the grim situation of having no means of income, but also he would have to repay the loaned amount, which he does not have. And in addition, a hefty interest on the loan as well, which is really salt on a wound-like situation. The bank would get away with one thing or the other, either the loan amount plus interest or something of equal or more value, such as the poor guy's house. This is where the situation of the poor getting poorer and the rich getting richer arises. With time, bank owners became the most powerful and influential people in the Western kingdoms. Monarchs, who used to be the wealthiest people in their kingdoms, found themselves having to seek out loans from the bank to pay for wars, etc. Up until this point, currencies were still technically bank receipts issued against something of equal value, a commodity held in the bank's vaults, mainly gold. However, the second pivotal point in money inequality arrived when everything changed drastically in 1970s and the US dollar became a fiat currency. They continued to issue dollars, but not as receipts for the gold they had in the Federal Reserve's bank. Instead, they would issue them out of thin air whenever and however they wished. So the dollar suddenly stopped being a receipt of money and became money itself. As other countries had already been using the US dollar for trade for over 50 years and had plenty of dollars held in their reserves, they had no choice but to remain silent. The rise of credit and debit cards, online banking, mobile payment apps, they all facilitated the shift towards cashless transactions. With cashless transaction, gone the cost of even developing or printing cash. It paved the way for a more credit-based society where all your financial and personal activities tracked, and a concept called credit rating emerged. So, as we speak, the world is trading in a form of money that is being generated by a computer algorithm. When you take a loan, the bank lends you some money. And where they got that money from? They just literally created new money to lend you. This phenomena is happening on a global scale, which is why the amount of cash in the world is increasing at an exponential rate, which causes inflation. So let's talk more about the interest system. Banks and interest are now inseparable. Interest might seem obvious and fair to you, but it really isn't. Making money out of money is not a problem in itself as long as the lender shares the risk of profit and loss with the borrower. Just like when buying shares of a company where we lend our money to that company, we make money if the company makes money and we lose money if the company loses money. That's fair. However, interest is a one-sided game and that only benefits the lender. Regardless of whether the borrower makes or loses money, they have to repay the borrowed money plus interest. Over time, the borrower finds themselves falling into more and more debts, and a time comes when they are literally taking out more loans just to repay the interest on the previous loans. You might consider yourself unaffected by this if you have a reasonable income from your job and don't have to take out loans, which is brilliant. However, you are not totally unharmed either. See, when I mentioned that banks create new money when giving out loans, that new money in the system dilutes the existing money, reducing its value. If you consider the amount of loans being given by banks all the time, it is really a big number. This causes inflation and erodes your savings. If you look at how much the US dollar was worth 100 years ago compared to today, you will understand what I'm talking about. So who pays for the devaluation of the currency? That's you, who has never ever taken any loans and saved money all your life in your bank account, nice and secure, backed by the government's assurance of never losing the money. If you are an average earner or a salaried person, you receive your income after taxes have been deducted. For some people, this deduction can be more than 50% of what they earn, and there are no tax loopholes available to them. However, the same cannot be said for the rich. The tax system is designed to attract investors and businesses because they bring money, create jobs, and contribute to the economy. Therefore, governments often develop tax systems that favor the rich, who happen to be business owners. This is to ensure that the businesses do not leave the country, as their departure would result in the loss of wealth and job opportunities for the country. For example, if Amazon were to be taxed at the same rate as its employees, Bezos would just wrap up and take the business elsewhere in the world where there is less tax. This would not only result in lost tax revenue from Amazon employees, but also a negative impact on the country's GDP and an increase in unemployment. Large-scale businesses are not only taxed at much lower levels than you do, but as icing on cake, they have several legal tax loopholes available to them as well. Firstly, by simply reinvesting in the business one way or the other, or showing up expenses as business expenses in their tax returns, they can literally take their taxes down to zero.
Can you say how many years you have avoided paying personal federal income taxes?
No, but I pay tax and I pay federal tax too. But I have a write-off. A lot of it's depreciation, which is a wonderful charge. I love depreciation. You know, she's given it to us.
So I have the Rich Dad Company in the business side. So let's say I make $1 million. I don't want to pay tax on that. So I take that $1 million, instead of spending it on something stupid, I buy a piece of real estate. So let's say for $5 million. So I go from 1 million to 5 million. Then I appreciate, depreciate, and amortize that 5 million, and it offsets my $1 million in tax.
That does not end here. Business often get themselves registered at offshore tax havens. These are countries which offer extremely low taxes to lure businesses into their countries. This tax system of favoring the rich has been around for thousands of years, and no matter how much you hate it or think of it as unfair, it is unlikely to go away soon, as it is completely legal. So what do rich do that you don't? You can only be one of these three: an employer, an employee, or a self-employed person. If you are on a salary or are self-employed or even have a local business, there is only so much you can do to earn more. As you are only using yourself as a workhorse, your income depends on the time you are able to spend on your work. Although you can achieve work-life balance and have a happy and satisfied life, but with this matrix confined traditional notion of wealth accumulation, such as getting a job, saving diligently, and retiring comfortably in old age, you will never be rich if you stay in this category. The only way to get rich is if you start a scalable business, such as a franchise, an online course, or a clothing brand, and you can expand it as much as you like. Although it requires a lot of effort in the beginning and you might find yourself experiencing failure after failure, if you stay focused, eventually chances are that you will establish an empire that starts paying you without being limited by your own time. This is called passive income. Not all businesses succeed. In fact, most startups fail. So if you simply open up another franchise grocery store that is inherently similar to Walmart, you will find yourself far outpaced by Walmart. In order for you to be successful, you would need to do something better than what Walmart does. It could be better customer service, a wider range of items being sold, or hitting a different consumer market, amongst other things. So try looking for something that is not currently available to the world, but would be worth having. Look for problems that the world needs solving and solve those problems. And if you did that and you were successful at it, you can get rich as well. Look around yourself and you will find that any self-made billionaire has done the same. Elon Musk solved the problem of online payments and created PayPal. Jeff Bezos solved the problem of easy online shopping with fast shipping and customer satisfaction through a seamless free returns policy. Google found a way to earn money without displaying tons of ads on their search tool and left Yahoo far behind with its plethora of ads, which was making loading pages a nightmare. This video was intended to give you an insight into the world that you might not have been aware of. Look, there is nothing inherently wrong with being a low-income earner if you are able to manage your expenses okay. In fact, hats off to you if you are managing to balance your income and expenses while being on a low income and you still stay happy. Being poor does not necessarily mean you are broke. Similarly, there is nothing wrong with being rich either if you have accumulated a wealth in the right way, especially by employing people and thereby providing a source of income for thousands, if not hundreds of thousands of households. Having said that, getting rich is not for everybody either. Accumulating wealth is not a bed of roses, neither the path to becoming rich nor staying rich. It requires years, if not decades, of sleepless nights and complete devotion of your soul, most likely at the expense of your health and your family life.
You ever worry about yourself imploding? Like it's just too much?
Absolutely. No one should put this many hours into work. This is not good. People should not work this hard. They should not do this. It's very painful.
Painful in what sense?
It hurts my brain and my heart.
So it is not for everybody. There are poor people in the world who are both broke and divorced, and there are rich people in the world who are divorced and broke too. In fact, it doesn't really matter how much wealth you accumulate in your lifetime, whether you are poor laborer in Burundi or a rich American billionaire, because in the end, we are all going to end up lying several feet beneath the soil. All the wealth that we accumulate is going to be left behind. The goal should be to earn enough so that you don't have to ask others for help, while at the same time having a good quality of life and enough time to have fun and spend with your family. What is enough for you might not be enough for somebody else, so it is you who have to decide what is sufficient for you. With that note, I wish you all the best.